Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, January the 10th, 2024. Kind of a mixed bag, but basically another solid rally day. And again, we saw a lot of funds move back in, or the stampede to get into stocks like NVIDIA continued today. We saw that initially rolled over and also included AMD, but then that stopped. But we're seeing money go back into NVIDIA primarily, but today it was Meta and Microsoft and actually Apple. Well, we saw a lot of funds roll back into there. Now, whether it was due to expirations coming up, due to just, funds being shifted from one sector to another sector, whatever it was, there was a lot being moved around today. Now, starting with the NASDAQ, and I'm basically going to start on the 4-hour chart because I continue to leave it with the count that allows for an additional new high before primary wave B is complete. And so that is that we are remaining within a minor fifth wave up, which consists of 5 waves of minute degree, of which we've completed 1, 2, 3, and 4. And we're inside that minute fifth wave. Now, could it still be a minor second wave? It can. But this thing is cruising. This thing is cruising and continues to be very, very suggestive of 5 waves up versus an ABC up. And so even if it was 5 waves up, this is getting ready to complete the first that 5, then as I have been discussing, that would just be wave A. Then we get a B wave and we still have a C wave, and that ultimately would then carry us above 17,165, which is the current high for this larger sequence. So with that in mind, I can just show you, this is what it looks like. And I want to bring it down so the focus can remain. Let's take it down and we're going to look right in here. We know what all this is, so let's just open it up so we can look inside all of this. Because it truly is, here are the 2 possibilities, that we have 1 and 2 complete, and wave 3 is going to be the extended wave, which actually, sorry, let me go over how I've got it labeled right now. That it's 1, 2, 3 got moved up to here. So before I was thinking it could be here. And as it turns out, it's 1, 2, and then 1, 2, 3, 4, 5, 3, 4. And then we begin that fifth wave, in which case we got 1, 2, maybe 1, 2 again, or 1, 2, maybe a little bit new high, and that's going to be a 1, 2, or underlying all of that, wave 5 is subdividing. And so wave 3 will not be the shortest because we can already see that wave 1 would be no matter where this ends up. So right now, I've got some, if indeed, I've got some resistance here at 1720, we'll call it. And that's still only just going to be like a mild stop. In other words, it's like a 1, 2, 3, 4, 5, maybe, and that's just going to be wave 1 of 5. So I do believe that we're extending. Or the other side of this coin is that we have 1, 2, and the wave 3 is the extended wave, and it's 1, 2, and then we're in 3 of 3, and it is where we're getting extension. So again, let me just show you 1, 2, and then wave 3 is the extended wave, and it's 1, 2, and then here's where the extension starts. 1, 2, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3, 4, 5 of 3, 4, 5. So it could be really extending. And it kind of fits just with the atmosphere that we got going on right now, but we could get a couple of stair steps up, 4, 5, 4, 5, before this is all done. And right now, I'm just connecting where I believe we might have a smaller pullback that I can relate to wave 1. And again, this changes because Before I was putting it here, and now I moved wave 3 up because we have more data, we have more trading, so I can fill in some of those blanks. I mean, as it was left yesterday, there was just too many ways that this market could go and still fill either count that I'm using at the moment. So right now, we're going to continue to allow the market to kind of just dictate direction, movement, everything back to me via how things are going to trade. But based on where we are right now, based on the numbers that I'm setting up right now, we should find resistance at 17,020. I do not think that's going to complete the 5th wave or even the 3rd wave. And I'm very, very tempted to go 1, 2, 1, 2, and then 1, 2. Even if I don't, even if I say 1, 2, 1, 2, 1, 2. That's a possibility, or 1, 2, and then 1, 2. So I mean, there's, because of how things are trading, there are a lot of possibilities to show this thing extending up. So I'm going to let that all play out, but based on where I can put fibs right now, we have the possibility of resistance at 17,020. Then again, this would be for the minute 5th wave. And then we have our next level of resistance at 17,120, and that's just 618. I don't suspect that would be putting us more inside of this minor wave 2, and in which case it could be A, B, C, A, B, and we're breaking down as we get this 3rd wave going. But you can see even from here, it's just the way it's subdividing, it's likely going to get surpassed this level and the previous high of 17,165, or the starting point for this being labeled minor wave 1. So we're close to kind of starting to break above 17,000, which is not going to leave a lot of room for the NASDAQ to kind of keep itself capped and just really drop over. Now, I never say never, not with the market anymore. So again, tomorrow we have CPI, Friday we have PPI. If anything rocks the boat, this thing could flip on a dime and just start coming back down. If it just changes the whole scenario on the narrative of how, what expectations moving forward in 2024 may or may not be. So my own personal feeling is that if that data, CPI and the PPI data, comes out favorable, anywhere looking like we're A-OK, we should still be on schedule to start seeing rate cuts by at least mid-year. I say they buy the you-know-what out of this market. Don't forget, these are algorithms, and that's going to be the initial move. How things actually end up, but those moves will get tagged and put into our count. Even if they're spike highs, they still kind of get themselves back in there at some point. So I do feel that the market stands a very, very strong possibility of breaking above 17,165 by Friday. So in any case, I think that we're going to just play it and see what happens. The trading was also very good today. You just basically, it was like getting long and trusting that the market was going to go. So it did show some little kind of sketchy stuff here and there. But overall, NVIDIA remained strong. Apple did turn back and picked it up. Amazon was strong today. Google picked up some good stuff. So, as long as we're getting these components, again, the big ones today, Meta, Microsoft, NVIDIA. So we're starting to wrap ourselves back around AI, artificial intelligence. And so things that are attached to artificial intelligence, like for example, what I found was a little bit interesting, but it went down based on the fact that they're buying another company. But Intel, folks, is involved, highly involved in supplying the necessary product to do a lot of artificial intelligence, the chips. So Intel is there, and they just purchased a company that's going to allow them to have a larger hold or a larger base within automotive artificial intelligence, which of course is self-driving, all the computer systems that are in a car that help the car, tell us all kinds of things. So Intel moving forward in artificial intelligence and being able to supply the chips necessary and buying a company that produces the chips for the automotive sector. Okay, so here, one last look. We have moving averages. The 200 is just still kind of getting flat. They're basically the 200, 100 are flat. But you would think that RSI is doing okay, but here we are making higher highs, and this is where all of the strength was. So we're making higher highs on weaker strength, or lower low, or lower highs. So a little divergence, maybe a turn, yeah. But every time we've seen that, suddenly it goes, nope, and it just kind of perks right up and gets right around us. So nothing really to kind of get too concerned about here. If I pull it out, let's take a quick look at the daily chart. Here we have the daily, and you can see everything's still looking very positive. So here, those negative bars have been replaced. That was the engulfing, and we've now had 2 days of follow through to the upside based on this candle. And everything again, still, 100, 200, 150, 28, taking its time and getting it to turn and get itself back above that 20. Once it happens, I think we skirt real quick. If it doesn't, we're going to go up on bupkis and turn lower and break right back below. So haven't seen that, but not saying it can't happen. Let's go over and take a look at the S&P. S&P actually was holding much higher, and I think it points much better today. Now, here's let me start in the 4-hour chart. Okay, we're still counting a primary, not a primary, an intermediate C wave, and we have what's inside that are 5 waves of minor degree, of which we have 1, 2, 3, 4. We're in minor 5, and it is developing pretty much in the same tone, the same vein as the NASDAQ, and where I have minute 1, 2, 3, and 4 possibly complete. But I'm going to go over the same setup. That the first one is that minute degree 1, 2, 3, 4, and we're in minute 5, and it is subdividing. Again, no real threat here that wave 3 would come in and best the shortest wave. Wave 5 definitely can get up to higher levels. And today we crossed 48.25. Now remember, 48.41 was that first level. That's the level to beat. And then once we're there, minor wave 5 can start looking for completion. But we're extending, so we're going to get, I think, a fair bit above that 48.41. Now, as in the NASDAQ, the alternate or the additional count that I'm still looking at here is that we have minute 1, minute 2, and this is minuet 1 of minute wave 3. So it would be wave 3 that is extending. So minuet wave 1, minuet wave 2, and then the third of the third is breaking down. So this would be sub minuet wave 1, sub minuet wave 2, 1, 2, 3, 4, 5, sub minuet wave 3 of minuet 3 of minute 3. So it could really get itself going. So 48.61 is really not unrealistic. 48.81 is not unrealistic for minor wave 5. In fact, I will continue to add on as this progresses, but you're going to see how these get filled in. So 49.19, 49.20, it's not really out of the picture yet. It depends on what really is in force here, but it's that final fly, that final fling, that final grab, or whatever the market is looking for. And again, I think it's just an accumulative effect on money being moved into sectors that most of us are expecting to explode and do well, whether or not, the broader market hangs in there. We have sectors that are tech heavy, where the effect on the S&P and the NASDAQ are much more visible, let's say, than in mid caps or, in a lot of different areas. So because, and here's the thing with artificial intelligence that I'm learning about, and maybe many of you already know. First of all, this is not something to ignore. The power that's going to come behind it and the earnings that it's going to provide are going to be vast, but there are going to be a lot of quote unquote, and you can't see me, but I'm putting up the quote signal, lemons. So in other words, it almost seems that the people will be tossing their money into things that just will not work. But we have corporations, we have companies that already have huge reserves, that have the billions of dollars to put into that research and development. Microsoft being one, Intel being one, NVIDIA being there, Apple being there. I mean, these are the big, huge companies that have those cash reserves, that if they need to start investing in artificial intelligence, which we know Microsoft and Google already are, to the tune of $3 to $5 billion. That's a lot of money, but they do it quietly. But their standing will carry them forward. So, and I do believe, again, I'm just going to say that I do believe that when we get a correction, they will correct as well, but there'll be this underlying strength. So the broader market may correct much harder than a lot of these stocks, which is why we see a lot of money moved into them in advance of a perceived possible soft landing, less of a severe recession, et cetera, et cetera. Okay, so back to the S&P. We continue. I'm going to leave this resistance at 48.25, even though we exceeded it twice, with the eventual high being at 28. So I'm going to keep it there because it'll probably futz around for a little while. But we get up, we get past it. Our next level is 48.61. And again, I'll be able to continue to put this count out as to where we're going to fill in maybe some of these blanks. But right now, 48.61, 48.81, 49.19. Those are our levels. And these are kind of black holes that will probably fill themselves in. But again, don't forget, I can go as right. I can go to the left as far as I want, and they won't find any resistance from price because we've never been up here before. So once we get past 48.41, we are in that kind of black hole territory, because it's either going to swarm us and take us into the new dimension or whatever, right? Or, it's just going to go, we have nothing reason, we don't know what we're doing, they're going to turn it and come back down. So a lot of things coming up, but I'm going to keep it right there, and we'll see what tomorrow brings. Now, again, let's write it down. Don't forget that what we have tomorrow morning at 8:30 a.m. initial jobless claims plus the CPI. Then at 11:30 we have Cleveland Fed President Loretta Mester. She's out making a TV appearance. 12:40 Richmond Fed Tom Barkin speaking somewhere, and at 2 p.m. Fed budget statement. Now, that's all coming out tomorrow. Have a great trading day. Our next update will be on Thursday, January the 11th.